Hello, it's Monday the 14th of April. So the big question last week was, where did all the selling in the bonds come from that caused President Trump to say people were getting yippy and postpone all of the tariffs that he had announced? There were lots of stories at the time about, hedge funds blowing up and leverage and too much leverage in the bond trade. And I kind of believe that because that almost happens every single time. It happened in the UK with just UK funds when Liz Truss announced her budget. We've been doing it basically getting the leverage wrong in these trades, where you pick up pennies in front of a steamroller ever since kind of long-term capital management. So that would explain it a bit. Except that, we all knew that these tariffs were coming, but there was a lot of volatility in the bond market. There was a lot. It was very unusual. But what was really unusual is all the narrative that we've seen since, because all of a sudden, first of all, everybody was talking about this being, the basis trade blowing up. And I can believe that a little bit. And then there was the endless, did China sell all their treasuries? Constant narrative. Every time I turned on the TV, Maria Bartiromo interviewing JP Morgan or anybody, was it China? Is this China out to get us? All of the news narrative that I'm reading is the same thing. The thing is that if we take, there's this on the US Treasury, Department of Treasury website, you can see who holds all of these treasuries, the long-term securities or long-term treasuries. You can see who hold them, and there's a whole table which is updated monthly of major foreign holders of treasuries. And if we take a look at those, we can see, and they're updated every month, so we can go back a year. And we can see that China over the past year has gone from basically 800 billion to 760 billion. So they've reduced slightly. But what's really interesting is in that same period, how much the holdings by European countries, particularly the UK, is a massive holder. China holds 760 billion, but the UK is just right there, almost as many, 750 billion. And if we add up all of the European countries that hold it, and we don't even count, Canada, who's not very happy about the tariffs, we can see that actually just European countries hold over 2 trillion. And so they're just as unhappy about the tariffs that Donald Trump has announced. And if they wanted to sell treasuries to cause a pause in these tariff implementation, they have as much motive and way more bonds to sell. And all of these European countries, if we look back from a year ago, like even countries that don't have that many, like Germany is up 10%, but an awful lot of them, Luxembourg up 20% in a year. They've all increased their holdings. So it's not out of, if this is financial warfare, which Donald Trump is starting, then it's not out of the question that Europe is not kind of collaborating to get this set aside. And the one thing that really makes me think that this might be going on is when you look at what happened last week in the dollar. So this was the weekly move in the dollar index, and this is the DXY. And here's the thing about the DXY. It's called the dollar index, but it's really this index that it's measured against is really 75% European countries. If you take a look at the breakup of the DXY, 57% is the euro. Another 3.6% is the Swiss franc, which is tied to the euro, and it's a manipulated currency, which takes us to 60%. And then with the Swedish krona and the pound, we're up to 75%. So when we're looking at this chart of a DXY, we're actually looking at the dollar against 75% European currencies. And so what we saw with this fall in the DXY when we lost the 200 weekly moving average, which is a really important support and resistance for this dollar index, and this big move last week, I think is a lot to do with somebody selling dollars and buying euros. And if What we saw last week, if we look at bonds, is when the US treasuries were being sold, the bond was rock solid, didn't move, super stable. Which means to me, especially with the move in the dollar, it looks like the Europeans were the ones selling US treasuries, and they were selling the dollar, buying the euro, and buying bonds. So we will not know, obviously, for another month until this tick data comes out again, and then we will be able to look at this and we'll be able to see exactly who it was that was selling these long-term treasuries and that caused the kind of Trump put to be used. And that's going to be really interesting, because if we are delayed on all of these tariffs 90 days and everybody knows now that there is a Trump put, then if they want to do it again because the tariffs aren't what they want, they could do it again. We could see some more of this financial warfare. So if we look at these currencies and the moves we have had, I think potentially we could see them stabilise this week. For me, I think there's at least in the euro more upside. And the reason is I'm always looking at measured moves. We made a new high above the July 2023 highs. This is a weekly chart. I think we've got more upside to at least 119, and more likely 120 is where we are headed back to in a big equal measured move, and I'm looking for this to be support. So when I look at the dollar and the technical setup of where we are, I think we have got more upside, and I wouldn't be surprised if we didn't see a little bit more of this financial warfare. Let's see how this unfolds. It seems like Europe has a lot to be unhappy with Trump about. Ukraine, tariffs, everything else. And we could see some warfare in the markets. That's what I'm looking at anyway. Just thought I would explain what I'm talking about.